Welcome back. Well, as we said earlier today, the Nifty has come off close to around 80 points from the high point of the day. So it's been a bit of a sell and rise, and that gap up is always most tricky. I think you rather look at the screen when the Nifty opens up a little bit lower, because it gives you an entry opportunity. Otherwise, when it opens higher, it's a perfect shorting opportunity for the bears to come in there, and that's precisely what's happened. But let's talk about a couple of other numbers. Dr. Lal Patlab, so they posted a rather weak set of numbers. The revenue has declined in comparison to last year, despite contribution coming in from the Suburban acquisition. Remember, most on the street were working with a bit of a growth, and that didn't really happen. The margins as well have come in a little bit lower. But let's understand what went on in the past quarter and what's the way ahead. To help us out with that, Dr. Om Manchanda, the MD of Dr. Lal Patlab, joins us on the show. Hi, sir. Good morning. Thanks so much for joining in. Well, margins still in that 23-24% odd band. Could you give us what's the outlook on the margin band, and then we could focus on a couple of your segments of your business as well?
Good morning. I think before I comment on your question, I just want to remind you that last year we had a very high base of COVID and COVID-related tests. Actually, that's impacting the growth rate as well as margin profile. But if you compare it with pre-COVID times, I think our margin trajectory is well within that range. On a normalized basis, our margins are hovering between 25 to 26%, and we hope that we will end the year also within the same range. Same way, growth rates are also a bit down because of very high base of COVID last year. Just to give you an idea, on a YTD basis, last year, COVID and COVID-related tests contributed nearly 20%, and that contribution is down to about 3%. I think that is what is impacting not only us, but I think entire industry is facing that kind of deleverage.
Okay.
But going forward, we are very hopeful that FY24, we are entering with a very cleaner base in FY23. And we will continue to focus on what we have always done well, which is organic growth in our core markets as well as develop new markets.
Mr. Manchanda, good morning. Appreciate that point. Of course, we were in an aberration year. We were in abnormal times. So let's focus on the business here and now. I believe the Delhi government is coming out with some sort of a proposal where they are going to be providing free testing, on a range of issues. Can you tell us a little more about this? I'm not sure if they would tie up with diagnostic companies like Dr. Lal's, or is this going to actually take away some of the business?
Not really, because the kind of segments that we cater to is very, very different than the business which is being catered by the government. So I think we are talking about two different segments.
Okay.
And Delhi government has been doing this activity even before as well.
Okay, so that's important to clarify and to know that it addresses a different section altogether. So then let's talk about headline growth. I mean, the reality being what it is, I think even in the Jan-Feb March quarter last year, there was some residual COVID impact because there was a third wave which was just kind of, petering out. So should we expect that high base to again impact numbers, the headline number, even for Q4?
In fact, if you remember, last year, Q4 was slightly unusual because, yes, there is a high base of COVID, but we had a soft quarter in terms of non-COVID business. So I think in Q4, we are entering with some kind of favorable base compared to what we have seen in Q2 and Q3. So my sense is Q4 would look better on non-COVID because we have a slightly lower base last year. But yes, you're right. We are also entering with a slightly higher COVID base. So my sense is after this quarter, we probably will not be talking about COVID base at all. I think FY23 is a very clean number right now.
Okay, so on the FY23 base, what kind of a revenue or a volume growth could you guide for?
We are hoping to actually maintain the similar growth momentum as we have seen in FY23, maybe slightly higher. As you know, that this industry has not taken price increase for the last 5 to 6 years. I'm not sure whether we can sustain that. So I think combination of price increase and bit of volume growth, we should be able to sustain the same momentum as we exit the year.
FY20. Since there is a base and there is various permutations and combinations, you want to put a number to the growth that you're looking at, the rough band. We've got the margin band 25 to 27%. In terms of revenue growth, what is the band?
I think it's very difficult for me to put down a number right now because Q4 also is, there are a lot of variations on quarter-on-quarter basis. I think once the year is over, maybe we'll get a better sense closer to month of March because Feb, March are very important month for us to see the trend for the current year. So I think it's difficult for me to put down a figure right now.
Dr. Manchanda, you said that you could look at price hikes, price increases, but in what categories? And does the competitive landscape actually allow that? Or could there be a risk of loss of market share if you do go ahead and hike prices?
I think that's a great question. If you look at our portfolio, there are two distinct segments. One is very routine, which nowadays you see a lot of preventive health checkups, etc. I think that part of the portfolio, it's very difficult to do anything. There is also a significant contribution that comes from specialized and super specialized tests. And we have seen that in the past, our cost structure in those areas are really moving up because it has a very high manual component compared to routine tests, which are mostly done on the machines. So I think this super and specialized and super specialized portfolio will see some kind of rationalization on prices as we go along.
And how much does it contribute to your overall revenue pie right now, the super specialized portfolio?
It's roughly about 30% of the portfolio.
Okay, and that's where you'll take the price hike. Got it.
All right. Dr. Manchanda, I want to talk about a couple of other aspects of your business. One is SwashFit, which is the, the preventive testing part of the business. It's ramping up well, and that's the more lucrative margin business. And that's what a couple of notes have suggested. You're currently going at a run rate of 400 crores per annum, close to roughly 90 to around 100 crores per quarter. How do you see this number scaling up?
I think this is primarily going up for multiple reasons. One is changing consumer behavior. A lot of patients are actually going for preventive health checkups, as you rightly mentioned. We are also seeing some kind of upgradation from, especially from chronic disease segment where people are doing frequent testing. They are upgrading themselves to a bundled packages because a greater value for money. And it's also very easy to actually book these kind of tests online. So you just click on some package and here the tests are done. So I think a change in consumer behavior is also driving this other than greater value for money. And there is a lot of a promotion spends happening in this direction,
so Dr.
especially by new age players. So this is one segment which is growing very rapidly.
Where do you see this headed from around 400 crores?
It translates about 20% of the business. My sense is it will definitely move up a couple of percentage points in the next year.
Okay, all right. And also the other part of the business, Suburban, it's going at a run rate of around 35, 37 crores odd. Because of the Mumbai lab costs, I think margins have come down to around 7% odd. What's the quarterly run rate you're looking at on this acquired business? Do you think you paid too much?
We have a very strategic view on this asset. I think the numbers this year look a little weaker because it had nearly 50% contribution from COVID, which is down roughly about 80-90%. But we do believe that this is a great sort of asset for us to build West region. And as you may be aware that we have recently launched a big central lab in Vidya Vihar in Mumbai. And I believe that's going to really help us drive growth. So right now we are focused on driving top line growth in Maharashtra and Mumbai.
Okay, got that, Mr. Manchanda. We will leave it on that note for this quarter. Thank you very much for joining in. The market is actually holding up quite okay, and this would be a sigh of relief for a lot of participants that the pressure remains ring-fenced to the Adani Group stocks. They are still down between 5%, 10%, 20%, depending on which one you're looking at. But the rest of the market, thanks to the banks, is really holding up well. We'll take a break on that note. Coming back on the other side with Shrikant Chauhan of Kotak Securities. We'll get some trading calls and technical ideas going. Back here with us on Bazaar, and we are looking at the market holding up, but yes, it's off the highs. You could say that. Shrikant Chauhan of Kotak Securities is with us with a couple of ideas. Shrikant, so how do you read things now? And what are the top calls, top trades that you would go with?
Yeah, I think, the markets are still finding a lot of difficulties to sustain at higher levels, especially whenever there is a higher opening, and FIs are consistently selling in the market. So one thing is very clear that till the markets are not crossing important levels, we need to be careful while adding positions at higher levels. But certainly on dips, we should look for adding some positions because the markets are going to remain in a range. And a few stocks are definitely going to do well. That's the overall view. Today, a few bank stocks are really doing well. They are recovering from their lows, especially HDFC Bank, which is currently trading at 1630.35. There we feel that the stock is again heading for the levels of 1660, 1670. And the overall formation is still into uptrend. So if we go through with the other banks, then there we saw downtrend sort of activity. but this particular bank is still holding above its important level. So HDFC Bank is a buy at current levels with a stop loss around 1610. Again, we can expect 1660, 1670 on the higher side. And the other stock which we like is from the pharma space, that is Dr. Reddy. And it is forming on long-term charts ascending triangle. So which is indicating us that it is heading for the levels of 4700. It was underperforming to the entire basket. Now again, it is outperforming when the other stocks are really doing not that great. So Dr. Reddy is also a buy at current levels, and we can expect 4700.
Okay, all right, Shrikant. Thank you very much. Appreciate you joining in, and we'll keep coming back to you for more. 45 points on the Nifty is what we have. You know, actually, apart from the Adani Group stocks as well, overall market breadth has turned negative quite a bit. I mean, if you can have the advanced decline, so 1,300 stocks are lower and 800 stocks are higher. So this has flipped from when we started, and at least look at that, the crossover happened. Vedanta, just a few names I want to highlight apart from the Adani names. Vedanta is down 4.5%. It's selling off. Nalco and Hindustan Copper are down 3 and 4% respectively. So, you know, some of these metal names are coming up right on top as losers. Crompton, we've been highlighting. It's sharply down, 8.5% down on Crompton. It's at about 305. Max Healthcare, we had the management with us, is down 3% on volumes. GMM Pfaudler is down 4%. All of these are some of the highest traded names, although volumes generally are not that great. But this is what is sort of selling off outside of the Adani names. On the upside, IndusInd is up another 3.5% after the 4% pop that we saw yesterday. So that's 7% in 2 days, making up for some of the losses we saw from last Thursday onwards. HDFC Bank, Bajaj Finance, Bajaj Finserv are some of the other names. ICICI Pru is another one. ICICI Pru actually ended higher, even though names like Max Financial and HDFC Life sold off. And ICICI Pru is adding on a little bit more from the insurance side right now. So just a bunch of names which are seeing some meaningful price activity. Commodities in focus. I mentioned some of the metals selling off, but Manisha is joining us with what is top of mind for her right now. Manisha, hi, morning.
Morning, Prashant. Thank you for that. Well, yes, metals are under pressure as we start Asia today, and so is the energy pack. Overall, if you look at the crude oil prices itself, we are down by 4.5% in this week itself. So we have been making lower lows, especially when it comes to the crude oil prices. After that good start to the year, we actually have seen constant declines here. I want to put on board on what we have seen as a high and low already in the first 40 days of this year. So while we started the first week of Jan with nearly $88 a barrel, we've slipped down to $78. That has been the low, and currently we're trading at 82. So somewhere in the middle, actually on the lower side of the range, is how the crude prices are trading with. A lot of factors, but I want to start with the dollar index because there has been a smart rebound onto this one. From a 9-month lows, we've seen the US dollar index gain up, and this is after the Bank of England and ECB hiked interest rates by 50 basis points. So their respective currencies declined and gave some strength to the US dollar index there. The second important factor is the buildup in the US inventories, and that we've seen happen for a 6th straight week. Markets were anticipating maybe a 500,000 barrel of a jump up in sense of inventories, but we saw more than 4 million barrels happen into last week itself. And now when you look at last 6 weeks in totality, 34.5 million barrels have been added to the US inventories, and not just crude. It's a similar scenario for gasoline, heating oil, natural gas. All of those inventories are much higher when you compare it to the last year. The US crude inventories itself are the highest since June 2021 now. The gasoline inventories have risen by 13 million barrels already in 2023. So the overall crude and crude products, all of that has seen an increase in inventories. The OPEC and allies meeting came and went, and they've decided to keep the output steady. So no big news from there. We did see December output increase, but the January output has been much as per the agreement that OPEC really had put out. And the markets will watch out now for the uncertainty where China really seems to be throwing up in sense of demand. While we have seen the loading numbers for December and Jan positive, but will Feb sustain is what the street will watch out for. And then it also has been about the Russian sanctions. European Union is all set to put a price cap on Russian refined products from 5th of Feb. So ahead of that, there's a lot of jitteriness into these markets as well. This is a report card of what we've done in this week until now. So as I told you, 4.5% of decline for the Brent prices. Even deeper, sharper cuts is what we've seen for natural gas, heating oil, and coal as well has started this year by nearly 30% of a decline coming in. So overall energy pack in the negative right now.
Okay, all right, Manisha. Got that. Thanks very much for the update there on the way the commodity universe is shaping up. We will take a very quick break with the news of the markets just about, managing to hold in positive territory. We'll take the break, and when we come back on the other side, as the one big event, the union budget, is done, we'll shift our focus on the next big one, the RBI's MPC decision. On the other side, Lata will be here with the CNBC-TV18 Citizens Monetary Policy Committee. With her will be CNBC